Maria, do you want to kick us off when you're ready?
Sure. Hello, everyone. Good evening. Welcome to our expert webinar. We're so happy to have you here connected online. And as a reminder, as Adam was saying, the chat box is the right tool to use to ask questions. I know we have both Q&A and chat. So I think we can just use one so that we can all have the questions in one single place. And we'll be, picking up the questions as we go and hopefully getting to all the answers by the end of the webinar. So with that, I'm just gonna, you wanna go to the next slide for me to explain quickly Karen in Spanish and then give it back to you? Or how do you wanna, you're muted. Okay, there you go, perfect. So I'm just gonna quickly say these instructions in Spanish for those Spanish listeners in the audience, and then we'll go back to English. Bienvenidos a todos, buenas noches, es un gusto tenerlos aquí en el taller del día. Hoy vamos a estar escuchando una plática acerca del financiamiento para nuestros planes estratégicos de COVID-19. Entonces, unas instrucciones básicas para poder escuchar el webinar en español. Si ven en su pantalla a mano derecha abajo, va a haber una opción para que ustedes puedan apachar y después seleccionar Spanish, o sea, español, para poder escuchar en ese idioma, y vamos a tener a Camila de Colombia ayudándonos ahí a poder hacer la traducción. Ahora bien, si están en el celular, on the next slide, Karen, please. Si están accesando al webinar desde el celular, la opción es irse abajo a mano derecha donde dicen los tres puntitos más o more, y luego ahí seleccionan el lenguaje de interpretación y luego deciden poner español. Entonces ahí va a estar Camila todo el tiempo. Si tienen preguntas también, pues las pueden poner en el chat y las podemos traducir en inglés cuando podamos. Así que muchas gracias y bienvenidos. So back to you, Karen. Thank you so much.
Thank you, Maria. So my name is Tina Patigny. I am a senior program officer at LISC Boston, and I manage the small business ecosystem and drive equity and economic opportunities for the LISC office. I am going to walk us through the agenda for the evening, and we'll start the agenda off with myself, giving you an overview of the Beyond 6 Feet Apart program. And then we will then have a panel discussion that will be led by Karen Kelleher, the Executive Director of LISC Boston. She will be moderating this evening. We will then move into questions from the Beyond 6 Feet Apart participants and then open the floor for additional questions from the audience. Thank you. So a brief introduction of LISC. LISC is one of the country's largest community development support organizations, and we've been supporting and collaborating with underserved communities for over 35 years to revitalize neighborhoods and bring greater economic opportunity to its residents. Although we're a national organization, we have deep local roots in Boston, and having invested more than $300 million in Massachusetts communities throughout those 35 years. Everything we invest in is done through an equity lens. We prioritize our investments from affordable housing, education, developing entrepreneurs, and growing existing businesses, and financing programs that connect people to technical assistance and resources to building capacity and stability. One of the most devastating aspects of COVID-19 crisis is the disproportionate impact it's having on communities of color, which is a clear outcome of discrimination and underinvestment that long predates the pandemic. LISC's urgent response was to provide support and/or relief by driving 4 critical solutions for small business impacted by offering resources through emergency grants, technical assistance, flexible long-term financing, and affordable housing and stability. So for this program, our goal for the Beyond 6 Feet Apart program was to help minority-owned small businesses reopen safely and pivot their strategy to win in the new normal. We launched the program to assist this particular demographic in getting back to work safely and strategically in the wake of COVID-19. As businesses reopen, they need to both adapt their business to the market and consumer changes and demands, as well as to make it safe and pursue new opportunities. We provide a structured and very disciplined planning process that's supported by consulting teams that guide the business in developing a robust implementation and investment plan to make sure their business is safe and has the potential to capture lost demand due to the pandemic. We also look to better understand the challenges that small businesses and owners of colors are facing at this time that help us to develop impactful tools and programs that can be deployed at scale by the small business ecosystem across the Commonwealth. The LISC partnership with the IXL Center is a powerful collaboration. The partnership is with this center in particular to who creates an innovative digitally enabled program with an audit and planning tool that can be scaled for use by other providers. This center is a global innovation firm with consultants and professors dedicated to business innovation, growth, and education. They train and supervise MBA students from across the country to provide consulting services to clients, which results in a low-cost model of providing high-quality service. The Beyond 6 Feet Apart team, the Beyond 6 Feet Apart team, that's all right. This particular cohort, it consists of approximately 27 businesses who have been divided into 4 industry sectors and matched with the MBA student consulting team that consists of 3 or 4 students. Again, these students are supervised by expert consultants who travel with the teams throughout the client's journey. And the IXL Center has a relationship with a wide variety of colleges and universities that partner with the center to allow the MBA students to gain firsthand knowledge and experience from expert consultants. So engaging small business experts in building our ecosystem, our thought was to have, and what we have implemented in this particular cohort was the idea of creating a program for impact at scale. So we've invited technical assistance providers to also invite businesses into the program and for they themselves to travel throughout the program participating so that they could support the small business that they brought in and receive a comprehensive understanding of the process as well. So we're excited to have them in the program and to gain their insights. Each team in this Beyond 6 Feet Apart program will go through a comprehensive planning process that will deliver tools and strategies specific to each business's need. Each business will begin with an onboarding and assessment process that will identify the risks and challenges associated with getting back to work safely. They will then adapt and work to map a solution that addresses the challenges and unsafe points that were discovered. The team then helps the business to pivot and rethink their methodology and strategy to be able to take advantage of new trends and opportunities. And finally, together they craft a cost-effective implementation plan that includes a communication plan, a digital capacity building plan, and a final financial investment plan with an ROI. So here we have our weekly webinars, which is what you are participating in today. We use these webinars in 2 ways. To bring awareness, understanding, and expert knowledge to real-world issues and challenges that small businesses are facing in reopening, in capacity building and sustaining their business. And we also take what we learn from these sessions and we incorporate them into the planning process for the business as they're traveling throughout the journey. So as you can see, we're offering digital learning in almost every webinar, except this one today. This one is very specific to finance. And so we've offered digital strategies because it's sort of the new force that's driving businesses. But also what we've realized throughout the program is that these digital processes cannot be implemented without financial assistance. And so here we have our financing in a COVID pivot webinar for today. So that's an overview of the Beyond 6 Feet Apart program. You can find more in-depth information on our website at liskboston.org, and that list will be provided to you at the end of the webinar. Karen?
Thanks so much, Tina. Hi, I'm Karen Kelleher. I'm the Executive Director of Lisk Boston, And I have the pleasure of being able to moderate our discussion with these great panelists. Tina is going to take off her introductory hat and put on her panelist hat later because she's going to come back and talk about one of LISC's financing tools for you. But I appreciate that introduction, Tina. Tonight we get to talk about what I feel like has been the elephant in the room in this accelerator, because we are all facing a very difficult time. Small businesses, particularly the businesses we're working with here for the reasons Tina teased out, are really struggling through this pandemic. You've been shut down, your customer demand has been cut back. And before this pandemic, minority-owned businesses and very small businesses, businesses owned by women, have had traditionally difficulty accessing capital. And so what you have tonight on this panel is 3 different community development financial institutions whose business is to try to develop ways to provide capital to those who aren't served by the market. And each of us works directly with minority-owned businesses and other small businesses to try to meet your needs. Sometimes it's very difficult to finance businesses for a variety of reasons. And I want to tell you just a little bit about LISC's journey trying to finance minority and women-owned businesses in Greater Boston and in Massachusetts. And then we'll introduce each of our panelists and share what their organizations do and what they offer. And we'll have a robust conversation. But it's really important that those of you who are business owners and even your teams on the phone participate in this conversation. As Tina said, we use these webinars for a variety of reasons, and one of them is they're a laboratory. They're helping us to understand what you need. And we know you need financing. We know you need money to cover your operating costs, to buy you time. We know you need to invest in your businesses. This entire program is about developing a strategy to invest in your business, to make it safe, and to have a new strategy, which may require you to have financing. So we don't have all the answers. I'm going to just start by laying that on the table. We may not be able to provide what you need, but it's our job to try and to bring the resources to the table that you need. So if you'll allow me, I'll tell you a little bit about what LISC has been doing, and then I'm going to ask our colleagues from 2 other really amazing CDFIs to tell you about what they do and frame our conversation. I need to move my slide. One of the things LISC has been really lucky to be able to do in this crisis is to provide recovery grants. And we have done some fundraising and provided some of that in Massachusetts through our local partners. We also at the national level have been incredibly blessed with corporate sponsors who have enabled us to raise literally almost $80 million to pass on to small and minority-owned businesses throughout the country. We've made grants to about 140 businesses in Massachusetts between our local and national programs, and those grants are going to keep coming because of our very large national sponsors and perhaps some of our local partners as well. We have not yet been able to marry the grants with this program, though there are participants in this cohort, and there were some in the prior cohort who did receive LISC grants, and we're thrilled when we can provide additional support. We wish we could provide them to everyone here. So if there are funders on the call who are interested in helping these businesses, you're going to hear about their financing needs, and we would be happy to pass your dollars on to them. We also have been trying to help minority-owned businesses to access the forgivable PPP loans that the federal government has made available to small businesses. And as probably everyone on this call knows, that program really was not designed for, nor did it well serve the very small businesses that are the sort of lifeblood of our main streets and our communities. It was really an easy program for larger businesses with lots of employees that were still at some desk somewhere to use, but not for these businesses. So in coalition with 40 other organizations, LISC and our partners provided technical assistance to more than 900 minority-owned businesses to try to understand this program and where appropriate to apply for these forgivable loans. About 350 businesses did, and we continue to, with this initiative, to provide assistance with the forgiveness process. And our partners on the phone are also assisting with this program in either through this coalition or in other ways, and they're going to talk about that and maybe some other SBA products that might be useful to you. This is a little bit of a history lesson from the Lisk land here in Boston. We had a pilot program called Impact Lending, and I've been with Lisk for about 2 years. This program actually happened just before I arrived, but we wrote a little paper to try to understand what did we learn about this, which we'll share after the webinar. We can share this paper, but we created 4 different products to try to serve the needs of minority and women-owned businesses. These were particularly in Greater Boston because we were partnered with Northeastern University and they wanted to focus there. And we had 4 products, which started with a micro loan, which Tina's going to tell you about later, which went up to $10,000 at the time, all the way up to, say, a $2 million working capital line of credit or a contract financing product. And what we found was that we had over 200 businesses start an application, and we were able to use the microloan product a lot. 30 or 40 businesses used it over 18 months, but the other products, which are larger, did not get used. We had trouble finding businesses that were able to qualify for underwriting criteria, which were like market rate underwriting criteria, but more flexible, but still difficult for a lot of the businesses we were working with to meet. And so we've been pivoting our strategy to, one, provide credit counseling for entrepreneurs, and we're doing that in a partnership with the Boston Ujima Project right now. We'll be looking over time to scale that work. We're working on technical assistance and capacity building programs like this one, and this is where the laboratory comes in, we're working to create more flexible products like grants, for example, which sometimes is what a business needs, or equity products, or blended products, or something more creative. So we're looking for your input. We do have a series of loan products that are available from Lisk at this time. The Kiva loan product is the micro loan product, and Tina's going to talk about it in a few moments. So I'll let her cover that. But we also have various loan products for businesses, but they do have more sort of typical debt underwriting criteria and require a credit score. I think both these products require a credit score of about 600. So they're somewhat forgiving, but they're not non-existent, right? And other underwriting criteria. So if you feel you need a product like this, we'd love to talk this through with you. We also have products that are really about financing real estate investments that a business needs to make. But my gut tells me a lot of the businesses we work with will not be able to qualify for many of these products beyond the micro loan. And that's where the creativity and filling gaps needs to come in. So that's a little bit of table setting from Lisk, but I want to pass the microphone over to my colleague Chris Hunter from LEAF, one of our great partners in the community development financial institution space. Chris is going to tell you a little bit about himself and his organization, but he also has got some great couple of slides to frame the financing environment that we're working in. Chris, can I pass the microphone to you?
Yeah, thank you for the introduction, Karen. My name is Chris Hunter. I'm an analyst at the Local Enterprise Assistance Fund. As Karen just said, we're a community development financial institution. Nationally, we provide financing to cooperatively owned businesses, so worker-owned companies, community-owned grocery stores, and resident-owned housing developments. Within Massachusetts, we have a strong focus on healthy food financing. So grocery stores located in communities where food access is a problem. And then within Greater Boston, and we've expanded across the state, we provide small business services, particularly technical assistance and capital advisory to help businesses navigate this sort of environment, and ultimately, providing capital to businesses where it has been a struggle to access. I just wanted to sort of start trying to frame sort of the landscape, the ecosystem for funding as we see it. And I think right now, COVID-19 has almost certainly sort of added complexity, but the buckets and pools of capital are the same. The first layer that I wanted to touch on is just crowdfunding, that it has always been used to get a business started as a sort of small one-person operation. And more recently, that's been a strategy that entities have used to say to their existing customers, to their base that they're trying to market to, hey, we're still here, we need your support. And it's a great community outreach tool that I've seen used more and more frequently recently. The next layer, and I don't want to spend too much time on it because you will be hearing from Axion and about the Lisk Kiva partnership on micro lending. But in addition to sort of you going out and raising capital from your market, there are programs that are designed to be smaller dollar amounts and meant to support businesses that aren't ready to take on $2 million in debt. But in particular, thinking about there are various government agencies that are set up to support the communities and the geographies that are around them. So, I'm not going to dive into examples. You'll hear a bit more in the next segment. But the next layer up from that is our organizations. So talking about LEAF, talking about LISC, Axion, and several other organizations in the ecosystem, that our missions are to serve low-income, immigrant, minority-owned businesses and to provide products that serve them. And most of those instruments tend to be debt, and there are a select few that are able to be a bit more flexible than that. But by and large, I would describe that next segment as banking, traditional commercial banks with more flexibility as far as underwriting and process and what is required to pass capital into the business. The next layer is even more geography focused and tends to be sort of a certain programmatic objective and to support potentially a particular sector, but thinking specifically about sort of impact funds. And I'll give an example of the Ujima project in Boston, of something that is specifically sort of community driven and meant to provide access to those who might be on the borderline between sort of being able to access the larger community development financial institution financing and sort of the crowdfunding sort of support you can get isn't enough in dollar amount to be sufficient for your needs. And then the last layer that is sort of highly specific is there are pools of equity and quasi-equity or preferred sort of more complex structures that exist, and they tend to be passed through angel investment groups and impact investors who are looking to find deals that on one hand can provide a rate of return that is attractive to investors and their constituents, but also that they're looking to support their community. So those investments tend to be concentrated on specific growth sectors and aren't always compatible with Main Street businesses. But particularly, I would just mention that more and more in sort of the current environment, those sorts of investors and those sorts of funds are taking steps to exactly as we're sort of trying to do here and gather information, taking steps to participate in this segment of our economy, because as already mentioned, small businesses are the lifeblood of the economy. They're the largest employers, but it's fragmented and small, and not everyone is ready to take in a large dollar amount. So finding these sort of specific aligned individuals is a critical avenue of access. I'd love to just jump to the next slide and say that, LEAF is a lending institution, a financing institution. So primarily what we're providing is debt. And my role at LEAF is in particular to try and bring more creativity to that process. As a technical assistance provider, as a business support provider, the realities of struggling to access capital are the recurring theme in all of these conversations right now, particularly in an economically distressed moment. And I think I would summarize what I see as sort of the key components of finding success in this environment as focusing on risks and de-risking the project. And it's sort of highlighted where your personal credit is extremely important. even if you're not going to a traditional lender who is just going to pull a credit report and, walk the other way. Having collateral and being able to talk about, I'm making an investment to pivot my business and that's requiring me to acquire this equipment or these items, talking about things that can be attractive to providers of capital. And in addition to that, looking at other programs that can enhance your credit, so guarantees on any financing that is out there. And I would sort of describe an example of that. The Paycheck Protection Program, the PPP, is effectively the government providing a guarantee to the banks to allow them to provide small businesses access to extremely low-cost capital, and it's effectively a grant. So, but ultimately, the real sort of secret sauce is being able to articulate the opportunity and to speak credibly about your expectations about the next several months and year, and looking at 24 months from now, where realistically can you be? And if you can agree on that point, it becomes a conversation about, well, what is our trajectory between now and that point in time? And the communication process for sort of describing that is, it is a thorough and detailed business plan. You might have put together a business plan when you first started the business, or you might sort of have recently come into business and you had a business plan. Now is the revision process and the sort of updating to reflect things, but it's realistic projections and communicating with other players in your industry. You can view them as competitors, but they are, in the same boat as you are, and hold information that you collectively can utilize to make a case for, this is the trajectory that we expect to be on. And lastly, it's recognizing the risks that you will be facing in the next coming months, that if things don't go as planned, this is where I will be. I don't think it's about hiding from the pitfalls and the challenges. It is ultimately sort of being upfront and saying, this is where things are, not sort of panic, there's no alternatives. I think it's, if this is going to work, this is what would be required for that to happen. So I don't want to take any more time diving into it, and we'll certainly sort of revisit all of this stuff in questions, but I'd love to pass it off to, I think, Tina to discuss LISC and the Kiva program.
We're going to go to Fatia first. She just doesn't have slides. So I'm going to actually just stop the share for a minute, and I'll reshare when we're coming back to that. And I meant to do this before we launched our discussion, but it doesn't hurt to break it up. We want to ask our business owners in the audience a couple of questions so that we know where you are and how your financing process has gone. So we want to ask a first question. I don't know if Adam is teeing this up. There he is. He's off mute. Yep. Adam, do you want to go ahead and tee up the question, and then we can share the answer after Fatia talks?
Sure. So I've got both of them in both questions in one poll.
Okay, great.
Cool. All right, I'll launch it right now. Cool. So you should see it appear on your screen here, and we'll give you a couple minutes to fill it out.
For the business owners here, we want to know if you have received financing of any of these particular types since COVID-19 hit, and then many of the business owners that are on the call are in the process of creating a plan for pivoting. If you're not part of the program, that's okay. You're undoubtedly coming up with your own way to respond to this crisis. And we want to ask you how much funding you think you need to invest in your business to successfully carry out your plan. I know that those of you in the program are not yet quite at the point where you've got your plan fully cooked with the financial numbers, but I suspect you have a sense for what you're going to need to spend. So maybe we can leave that up for a minute while we continue the conversation, and we'll share the responses later. Please do respond if you're with us. So with no further ado, I want to introduce our next guest, Fatia Aynan. And if I'm not pronouncing your name properly, please correct me, because I don't think I've heard you say it out loud. But she is with an amazing organization called Acción, Lisk and Axion have partnered in various places around the country previously, including, I think in Chicago, we have a partnership to serve minority-owned businesses there. I don't think we have anything formal yet here, but here we are having a conversation. Fatia, please tell us about Axion and yourself. But first, unmute yourself, please. Let's see. Or if someone else
Yes, we can hear you.
Oh. I cannot.
Yeah, we can't. Is she maybe on a different channel?
Is she in the Spanish channel? That would be.
I think so.
Please bear with us just a minute.
Yeah, if you click or Adam, just remove the translation, please. And that'll make it easier.
Okay.
Perfect. Let's try again.
Okay, can you hear me now?
Yes.
All right, perfect. Thanks, Karen. I'm going to be very brief because I'm really looking forward to the feedback from the small business owners. And I think you and Chris did a great job about like describing the financial scene. For everybody, my name is Fatiha. I'm London team leader with Axion. Axion is a nonprofit organization. We've been around a little bit over 25 years. We are a micro lender, and similar to Lisk and to Leaf, we are a mission-based lender. And our mission is financial inclusion to actually women-owned businesses, startups, people of color that actually don't have access to financing from the traditional institutions such as banks. I would say 40% of our clients are minority-owned businesses, and the average size of the business that we deal with are people that usually have less than 5 employees. A large portion of our clients as well are immigrants, people who actually immigrated from Latin America, South America, or actually from the Middle East, and they started their own businesses here. Our lending program, so as I mentioned, we're a micro lender, so our loans, they range anywhere between 1,000 to 50,000 for the micro loan. However, we're also an SBA approved lender. We provide loans anywhere between 50 to 250. Our lending criteria are flexible. That's the reason why a lot of people that get rejected by traditional financial inclusion, they can come to Axion. We're flexible in terms of credit. We actually ask for a credit as low as 575. And also we are flexible in terms of financials, the cash flow. We are not very picky, but yeah, we need a business that is valid because as I mentioned, our mission is actually to build the businesses to the point that they're strong enough to go to either bigger institutions that can provide them with larger loan amounts, or they can provide them with better terms. Our interest rate is actually a little bit higher than other organizations. It goes anywhere between 5% to 15.99. There is no shame in it, but our goal is actually to build clients to the point that they can actually go and get better options out there. Also, we are strictly micro lender. We only offer loans, so we encourage clients to build the businesses to the point that they can go to a better to another institution, so they can get like access to different products like lines of credit, or real estate, or other products. What's our response to COVID? It's been a learning curve for us as well. If you think that this was actually unpredictable, it was unpredictable for financial institutions as well. We didn't know what to do, to be honest with you. Like many of us, we never could have predicted in a million years that something like this happened. We do have experience with some sort of catastrophes, like in New York or in Florida with the hurricanes, but we know that happens, and we also, it happens only to certain areas, or it's not going to happen all over the state. This is something that like happens in all the United States, in the whole world. So the first thing that we did is start providing the ferment to our clients just to ease the burden on them. So give them like some room to breathe. And also while we were actually trying to find solutions. Like Karen said, fundraising was the major point. We were trying to help our clients, but also like raise money in order to come up with programs. And we have to improvise programs, and we have to adapt, like many of you. So if you think it was hard on you, it was hard on financial inclusion, on institutions as well. But we did not want to give up on people. We wanted to help. As a loan consultant myself, I would say, the first calls that we got, like Karen said, it were women-owned businesses, and it was people of color or minority-owned businesses. These are the people or the small business owners that actually got hit at first. These were the first calls that we got. Was it a surprise? It was not a surprise. I know from working 10 years at Axion, those are the people that are very, very, very vulnerable. And there are people that really, really run on a very thin cash flow. It's not a surprise, but it's unfortunate. After we did actually fundraise, we started offering a 5K grant that went by very fast because people needed it. I personally thought it was not enough, but at least it was like a help out there. And another portion that we did actually is technical assistance. So just reaching out, like when Lisk started the grant, we just started sharing all the information with our clients and helping them apply for it. A lot of our clients are really not very tech savvy, so they require a lot of hand holding. A lot of them, they have like the language obstacles, so we just help them apply for the LISC grant, for all the grants, and also sort of like filtering the information. When this just started, it was so much information. It was so confusing to someone like me in the field, like let alone someone who never heard about it. And we just like starting to filter the information and send in the links or whatever information we find out there to the small business owners. When we got to provide the PPP, we started providing the PPP. A lot of the people that we worked with, they were very small. I would say the average of the PPP that we offered, it was like 3K, and mainly like sole proprietors and people with Schedule Cs. A lot of them didn't even know that they can get the PPP, which is unfortunate. Like it just like they heard it word up, like someone took it and they just tell them, oh, you can't get it. So people like would call and be like, oh, really, can I get it? I'm like, yeah, you can. So a lot of really, really informal businesses. Was it enough? It was not enough. We're still trying to fundraise more in order to come up with some lending products. We're still doing the micro loan. However, our community advantage SBA loan, loans between 50 to 200, we are just pausing on that. Probably going to start lending again towards the end of the year, but we'd rather do small loans to people that need it rather than just giving out like those large loans. And we usually work with startups, but we are not working with startups. I personally don't think it's the right time to start a business right now, unless it's an essential business. I've been getting a lot of requests from startup storefronts. And this is a piece of advice that I want to give people. A lot of landlords, they're very thirsty for the money, and they are actually hurting themselves. So they're going to give you good deals, but is it the right time to get actually engaged in a year lease where everything is so unpredictable right now? We don't know if we're going to get into another quarantine or what's going to happen. I'm being positive. I hope things will go very well, but I just want people to be like really, really not to buy into those leases or start like a storefront business right now where everything is so unpredictable. That was it.
Fatiha, thank you so much. It's not an optimistic note to end on, but it's a realistic note. We know from the data starting to come in that Nationally, and this is the early data, there may be newer data now, 21% of all small businesses have closed. And for Black-owned businesses, I believe that number is estimated to be at 40%. So this is a fight for survival. And this question of financing is a fundamental one. And we know you all struggle with it. And I'm about to pass the microphone to Tina, who actually had the opportunity recently to make some phone calls to some business owners and say, hey, I've got some money for you. We don't get to do that too often. And so maybe she'll tell a story about that. But she's also going to tell you about our micro lending program, which is also actually a crowdfunding program that tries to help a business owner build their credit. But she's got that story, so I'm going to pass it to her. And then after she does some introductory remarks, we'll get the results of our poll and get the conversation going.
All right, thank you, Karen. So I'm always excited to talk about Kiva because I think this is a financial product that I don't understand why anyone would not take advantage of. Excuse me. It's an amazing program. So Kiva was established in 2005 as the world's first personal microlending website program. And Kiva is a small business lending program that operates through an online crowdfunding platform. Minority-owned businesses often struggle, they often struggle with securing loans, getting lines of credit, and sort of other, financial resources that they need to help to start a business or to grow their business or expand their business. They don't often, get those opportunities. So Kiva enables everyday people to pool money together and pool small lending contributions to provide financial access to entrepreneurs across the globe. Kiva believes that dreams are universal, opportunity is not. And so they envision a financially inclusive world where all people hold the power to improve their lives. And through this lending platform, they provide opportunities for people to bring their dreams to life. So just a little bit about Lisk and Kiva's partnership. Lisk and Kiva have been in partnership since 2015, expanding financial opportunities for underserved entrepreneurs across the country. Lisk has made a financial match of over $700,000 to nearly 300 businesses that have been supported by more than 100 trustees, which resulted in loans to businesses totaling over $1.6 million. And that's to date. So what is Kiva? Quick overview, Kiva is a micro-lending program that operates through an online crowdfunding platform. Unlike traditional loans that require credit checks and offer high interest rates and initial fees, Kiva is a character-based loan. A character-based loan. It offers 0% interest, 0 fees, and up to $15,000. It's typically $10,000, but we are in COVID times, and so that so that dollar amount has increased. And these loans are with no collateral. Like, when do you ever hear of that? No collateral. And so this loan relies on the strength of your social media network. It relies on the strength of who you know, your family and your friends. And I think, those who are, whether you're in business or not, most people have a stream of followers on Instagram and Facebook. And these are the people that are actually lending you money. And I know in your mind, half of you are saying, well, I know half my friends are not giving me anything. They're not loaning me anything. But when you get to the end, you'll see when I get to the end, you'll see how realistic it is. Typical terms of a Kiva loan, repayment is between 1 to 3 years, and that's on a monthly basis, the repayment. The loans are dispersed and repaid through PayPal, and they get distributed back to your lenders through the PayPal channel. So those who have given you money, every time you make a payment, they get a portion of their payment back. So the Kiva program is operated through sort of local trustees, and these are trustees that endorse the small business through the Kiva program, which means for the most part that they just vouch for the business viability, they vouch for your character as an owner. And that actually comes through sort of the LISC portal. So they're vetted by LISC, the trustees. And so the crowdfunding is by people all over the world who can lend you as something as little as $25. I believe that's actually the minimum, $25. So once you get it started with your friends and family, then you can reach out to borrowers across the globe, even those that you don't know, because you'll put it on a platform, an online platform, and everyone will have the opportunity to see your business and what you're raising funds for. Borrowers can qualify for LISC matching funds by working with the local trustee that I just mentioned that is vetted by LISC, and that trustee sort of serves as part of our kind of our network of LISC trustees. How the match works, LISC matches incremental loan amounts one-to-one. So as they're made to you, the borrower, LISC will match for every $25 you get, LISC will put in $25. And so a borrower has to reach the campaign loan goal in order to access the funds that they're actually borrowing. And it has to be endorsed by a registered LISC trustee. So that's pretty much the overview of Kiva and how it works. And that's just sort of the basics. I'm here for questions because I'm sure you guys have some burning questions and I'm ready to answer. So, Karen,
thanks, Tina. I'm gonna name a couple of our local trustees and then I'm gonna invite you to add to the list if you can remember some others. Commonwealth Kitchen. Is Leaf one of our Kiva trustees? No, maybe not, so. Maybe. Grove Hall Main Streets.
The Loop Lab.
The Loop Lab. There are 15 of them, so it's pitiful that we're not doing a better job, but we will share that with you all with the materials from the event. So thanks, Tina. And I'm gonna ask all of our panelists to tell, maybe at the end, a success story of a business that you financed that's been able to grow to the next stage. And Chris, you can pull yours right out of the chat. I don't know if you happen to have noticed, but you've got a fan in the chat. I'm going to read it out loud because it's so nice. If I can find it. Here we go. From Carlene O'Garo. Chris is, this went only to the panelists, so if you're not seeing it in the chat, that's why. Chris is amazing, exclamation point, exclamation point. He, along with Leaf, helped us tremendously with making sure our wholesale numbers were profitable to us. I am forever grateful to Chris, Amin, and Leaf. So nice to know that you've got fans out there, Chris. Adam, I'm gonna ask you if we have poll results to share as we head into our conversation here.
Absolutely, so let me just share them right now. Can you see them?
I can. I can see the top one, and I'll tell you when we need to move to the next one. So 57% of you did receive a forgivable PPP loan. Through the initiative I mentioned, the average loan amounts were about $13,000, which also feels low, but maybe not quite as low as the $3,000 Fatiha talked about. It was a labor of love to go through those application processes. If you need help with the forgiveness process, we can still help you with technical assistance on that, and we'll share that information after the webinar. Half of you have received a grant of one sort or another, so that's great. I've seen some comments in the chat. One of our businesses got one from the city of Boston. They've had a couple of grant programs. There is federal CDBG, Community Development Block Grant money, that initially larger cities received, and I know a number of Massachusetts cities have had grant programs. There is also some money that was recently awarded from the state to smaller cities and regions, and that will start to be showing up in grant programs. And there are state grant programs that are coming that will serve the whole state. And I know the Boston still has some grant programs open. And I should probably mention that LISC continues to make grants. And if we will share after the webinar sort of the page where you can get on a list so that you find out about the next round. You do have to apply every time we have a round. It only takes about 15 minutes. They are very, 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 very competitive is the one proviso I have to put out there, because those grant programs are national. And so there are businesses all over the country applying. And to be honest, we get more applicants every round. That being said, we have been able to, about every round, we get about 20 in Massachusetts. So if you don't apply, you can't get it. EIDL, we've got 40% of you got EIDL loans. So that's great. That gives you some running room, gives you some, the combination of these sources, hopefully gives you some running room, and 9% of you have other financing. So if you have either questions about these sources, or sort of you want to tell us your story about how you've obtained this financing, please chime in the discussion. So the second question, how much funding do you expect to need to invest in to successfully carry out your Beyond 6 Feet Apart plan? We've got 22% of you coming in with a very modest investment up to $2,500. A couple of you, one person in between $2,500 and $5,000. And then we're jumping up to almost $10,000. We have 13% there and 17% at the $10,000 to $25,000. And I can't quite see the bottom. Oh, there we go. 43% of you expect to invest $25,000 or more. So I would love to hear some of those stories. What is it you need to invest in, and how well do you feel you're prepared to do that? What do you need? I have questions for the panelists. It's a little bit before 6. I want to make sure we give our businesses at least 25 minutes to ask questions and have that conversation. But if you guys don't mind, I'm going to ask them a couple of questions right now, and then we'll get into it. So, Chris, you mentioned equity. I'm curious if you can tell me what kinds of businesses might qualify for an equity investment, and do you see the potential for that to change right now? This is an unusual time where there is really awareness of the critical situation that small businesses, Main Street businesses, and particularly minority-owned businesses are facing, and the challenges they face accessing capital. Do you think there are equity investors out there who are going to be willing to take risk with different kinds of businesses, or grant money that will be able to be paired with other kinds of capital to provide new kinds of equity?
I do. I think so. We tend to discuss capital in sort of only two buckets, as sort of debt and equity as these two extremes. And, there's almost certainly a wide spectrum in between. So I think most of the conversations about equity are sort of really centered around concern about loss of control. And I think, that's a very fair and reasonable sort of concern for anyone to come to the conversation with. And then the second sort of concern that usually comes in sort of thinking about the viability of equity as an instrument is its cost. Investors tend to be looking for higher rates of return, and it tends to put a damper on sort of the kind of conversation you're having if someone is looking for more than you're willing to provide. So I think probably the first thought that comes to mind for me is ultimately that coming up with hybrid instruments or agreements that sort of specify terms around equity. Equity is not just a share of the business and sort of voting rights and participation. It's an agreement on, what portion of the cash flow do you share in the business? And in addition, sort of what is the process for return of capital? So when I tend to think about equity, I'm thinking about a preferred equity instrument where you might have multiple forms of cash flow. One is sort of just the profits of the business. One might be sort of deferred dividends or deferred sort of interest in the way you might have a debt instrument. And then later on, we start thinking about return of capital. So my version of equity that probably is most easily applicable is thinking about something that is a longer term instrument where someone can say, I think your business will be around 10 years from now, or I know I can sort of cover you through the next 12 months. and I will be your partner in the business for the next 5 years. But after that point, I want to exit. I think being able to have those sorts of conversations really rests on having a credible picture of your business. But getting to equity and sort of being able to talk about it, I think, is more about being able to negotiate terms and to discuss what would work for you and what is sort of fair. But
jump in and ask you, maybe if you could give us an example of a business that might be, like some of the
Karen?
Oh,
Karen, you sound really robotic there.
gosh, I'm sorry.
Not sure why.
so I'll give it's still a generic example, but I'll wrap it up in something more specific. Several businesses that I've been in conversations with have gone back to their landlords and started talking about percentage rent agreements, which is not a direct form of equity because they're not listed as sort of an owner in the business, but structurally, if you sort of think about it, they're participating in either sort of the revenue level or the profit level of the business. So you end up with what is effectively an equity investment in the future success of the business because they want to keep you as a tenant. So an example of that is, I've talked with several restaurants in the last few months who, my landlord is breathing down my neck and looking for either back rent or sort of for me to renew my lease. I'm not comfortable with this. And the example has been saying, the industry average rate for percentage rent is somewhere between 6 and 8%. Can we agree on a percentage rent of this amount? And if you sort of play out the numbers, okay, maybe that looks like an equity stake in the business, and down the line you need to renegotiate what the exit is and moving back to a fixed rent. I'm not sure if that sort of captures what you were looking for, but I've had several businesses have success with that sort of negotiating tactic. And I guess several others who, they may have brought in, and this is highly dependent on your network, highly dependent on, again, your sense of what the meaning of equity is in the context of control, but inviting in either other partners in their industry or people who might have been sort of extended sort of family and friend who aren't necessarily looking to engage in the management of the business, but who have enough to weather the storm as it is, and who have a patient enough timeline to be able to say, okay, I'd like to sort of own this section of your business, but I'm not coming in to try and sort of tear apart everything you're doing and seize control. So that's what I've seen.
I am. I'm going to have to log out and back in. And so I'm going to ask Tina, maybe she can take some questions from the Q&A and I'll jump back in a few minutes.
Sure. Actually, I just want to sort of ask a question to Chris, and anyone else who wants to chime in. When I think about equity, I think about, I hear it from your perspective, but when I think about equity, I think about it from the start, right? Like out of the gate, I mean, let's talk about sort of the realism of like businesses of color, right? Starting a business, even, so when I think about COVID-19, it's like, a lot of them are starting a business again, right? Whether it's in their basement or whatever it is, they're starting again. And so when I think about equity, I think about from the start, right? The playing field isn't even leveled. So all of what you're talking about is kind of later on down the line when they're kind of established, or so what do you say to the equity at the start?
I agree with you. It is at the sort of inception of a business, the capital structure, the capital stack in this ecosystem tends to be slanted towards debt, simply because equity is so hard to not just acquire, but also to acquire in a way that is fair and equitable. And I think my impression is that on one hand, businesses that sort of start with the sort of hard, not sort of a hard restriction, but the intention of we're going to need to raise equity in some form in this amount. And if we can't raise that, if we can't sort of get to that threshold between sort of your own sort of funds and what you're able to attract from your network, it makes the sort of binary, do I start the business or do I not start the business decision, is the equity piece. And I think where I feel like the lack of equity becomes apparent is particularly in sort of, depending on what sector you're in, depending on what industry you're in, it's not always the right instrument. It's not always the right structure, but you need to effectively own that piece of the problem. And what I mean by that is that starting a business is you exposing yourself, your time that you invest in it. That is the equity that you own, is your time. And ultimately, starting in a business, particularly in this environment, is a decision between, you know, the job market and the sort of small business development stage. And I think being critical about it up front is the only way to avoid the pitfalls. I think the structural issues of access to capital, particularly as you think about entrepreneurs of color, entrepreneurs who, you know, might have the skill set but don't have the financial background to make their case comfortably. I think these are the sort of places where you are forced to lean on this ecosystem, sort of that we populate, the CDFI ecosystem, to try and synthetically provide what equity would have provided in the form of technical assistance, in the form of what grant programs there are that can support you taking in other kinds of capital.
How's my audio? Better? Thank you. So there are some unique, let's call them synthetic programs designed specifically for the kinds of businesses in this program, minority-owned businesses, local businesses. Let's talk about some of them. Fatiha, I don't know if you have any you would want to bring up. I know there's the Foundation for Business Equity has some unique products that they pair with technical assistance. Boston Ujima Project has some. We've talked about ours. What else is out there in the ecosystem for the businesses we're all trying to serve? I'm opening that one up.
Yeah, I can go ahead. So actually, we do have a program that is specifically designed to women and entrepreneurs of color that actually happen to be female as well. So we have that program in partnership with Tory Burch, the designer. So we offer actually very flexible lending to actually female entrepreneurs, and the lower interest rate, lower than the average that we offer. But the beauty of the program is actually the piece of advice or technical assistance part of it, where every single person who actually is part of the program, they get actually technical assistance throughout the life of their loan, but also beyond. Even though they are not, they pay off their loan, they actually still have the technical assistance portion out of it. The other program that I want to speak about it, which is actually not specific to a gender, but it's more like industry. We all know that one of the riskiest industries is actually the food and beverage industries. So we do have the partnership with Samuel Adams, which is called Ruin the American Dream. And each entrepreneur who gets actually a loan with Action, and they happen to be in the food and beverage industry, they get actually free access to a lot of resources out there, and mentorship, which is very, very important. Means financing is good, but a lot of entrepreneurs, they actually need mentorship. And as an example, if someone have they are developing a product and they have like a question about packaging, they can actually get paired with someone from the packaging department at the Samuel Adams, and they can actually have access to a lot of information. I know Caroline, she's on the call. She's a former Axion client, and she actually one of the first people to benefit from the program. She may actually share her experience with that. I personally think it's a great program, and it's a great partnership for that type of industry.
If she wants to share her story, I would love to start bringing the voices of our businesses into this conversation. And I have to warn you guys, when I went out and came back in, I can no longer see the chat and the Q&A from before I left, but I read it all. So I know a couple of you out there. Just Tease has some something you'd like to bring up. Who else? Ewan Davis from Barber Time had a comment there. So if you are either the client that Fatiha has just mentioned, please unmute yourself, and if you and tell your story. And if she's feeling shy about that, that's fine. But then I'm going to ask first Just Tease if they want to ask the question online.
So Karen, I have to allow them to talk, so just call them out and I'll unmute them on the chat.
Okay, great.
So Dwayne, are you there?
If you are speaking, you're muted, Dwayne. You might be making dinner. What can we say? Let's Fatiha, what's your client's name so that Adam can give her the ability?
Carlene.
Not Carlene Porcena.
No.
Different Carlene. Carlene Porcena used to be a Lisk employee. She's a fabulous partner who's now at Berkshire Bank. Revax Labs.
Is it Carlene Oguero?
How's that going? Chris, while we do that, is there any other program that you're aware of that you would want to call out for the folks here? And Carlene will come right over to you in a minute.
Carlene, are you there?
Hey, I'm here. Can you guys hear me?
Yes, we can.
Yes, we can.
Oh,
That's a
okay.
beautiful cake.
Yeah, thank you. Thank you. Yes, I actually was able to receive the Brewing the American Dream Axion loan back in 2008, I think it was. And it allowed me to pay my vendors and grow my business to another level. I think I've received maybe 2 more Brewing the American Dreams since then, so a total of 3. And each step, it's allowed me to grow the business to another level. With it came a lot of the mentoring that you talked about. So whether it was packaging, whether it was making sure vendors paid on time, making sure I put terms in with the products that I'm selling, just advising me on contracts. That's what the loan did, and what I appreciate most, it wasn't just a loan, boom, here you go, do your best. It was a loan that came with a lot of mentoring and advising and guidance. That's what I actually really appreciate the most.
Thanks so much for telling your story. Can you hear me?
Yes.
It's so great to hear the real life story, because talking about a program is never as interesting as hearing your story.
Thank you.
Sounds like a great program though. Dwayne, would you like to go ahead? And then after Dwayne, Javier Amador Pena, perhaps?
Hi, Dwayne. You just gotta unmute yourself and you can ask your question.
He commented in the interim, so I'm hopeful that he's just having trouble getting that mute button.
You can bring on
Javier, you want to comment? I see your comment in the chat and would love to hear your story. Javier's at Monumental Market And I think I see him.
Yep. Hello.
Hi, we can hear you. Please go ahead. I feel like a radio host.
No, I mean, when you were asking if there were another institutions for loans, and I just wanted to share that we also not only have one with Lyft, they're great, and you know, they deferred the payments, but also JPNDC in Boston. And I don't know why they are not here, but they are great, and they are for small businesses and people of color and minority and stuff like that. They are great. And Carlos Espinosa Toro is a good contact. So I just wanted to share that.
He has been an amazing partner in this Beyond 6 Feet Apart program. He's going through it for the second time with you guys. And we're thrilled he brought you into the program. I can't wait to hear what your plan is. Do you have, you didn't ask to ask any questions about financing, but if you have any, feel free to
No,
ask.
I think, and you know, we applied to the LISC grant, but I just wanted to know how are the decisions made when these grants come on, because I didn't get any. I just wanted to see what kind of information I can present the next time the next round comes, to see if we can get one.
Thank you for asking that question, because I think it's helpful to know. I don't know the numbers, but like for the last round, I think we might have received 100,000 applications. So the national pools are just very competitive. There are criteria that make you a priority applicant. And those criteria are things like you are a minority-owned business, you are in a low-income census tract or a census tract that has been selected by the local office as a priority census tract. If you're in a gateway city or a low-income neighborhood of Boston or a surrounding city, you're in those census tracts. So we also have some priority for other kinds of disadvantaged groups like a LGBTQ or veteran-owned business. So those criteria are already getting you into a priority position, but then once we identify all those that sort of rank highest, it's a little bit of a lottery process, to be honest. It is literally, the selections are made by computer. And then they send the list to the local office to make sure that there's not someone there that we think wouldn't be an appropriate business, but we don't get to sort of lift up the businesses that we want to fund. Unfortunately. So it's fair in that way. It gives us an answer we can give you that helps you feel like, all right, I might be treated fairly, but I can't tell you that I can heavily increase your chances of getting funded.
Okay.
When we have local funding, the chances are much better, right? So we had a local program where we funded about 80 businesses. We had about 4,000 applications for that. So it's still very competitive. But less so, and similar priorities. And in that program, we very specifically included business support organizations like JPNDC and gave priority to those businesses that came in and said, I'm affiliated with a business support organization. And before we made grants, we asked the business support organization to give us information. And so I lied before when I said we don't have a partnership with Accion here, because we do. For our national grant programs, they actually help us do some of the due diligence. And if it's all done, you know, with public databases and information like that. But where we have a business support organization or somebody like Carlos who says, Monumental Market is a great business, they're doing great things in their community, that is really, really helpful to us, and that's who we want to fund. So I hope we will have more local funding as well. What I'd really love is to be able to pair the local funding with our technical assistance programs, or to specifically target it at those who've been through them, but we're continuing to raise money. So that's probably more than people need to know, but I feel terrible when people fill out the application over and over and over again. So I want you to have a realistic expectation. But again, like I said before, we funded about 60 businesses in Massachusetts through those national programs. So do not stop applying, because you could win in the next one.
Okay, great, thank you.
Dwayne Osborne, should we try you one more time? He's not up.
So, Karen, I saw in the chat, he was just saying that he said if there are any Black-owned businesses that are looking for retail space inside Nubian Square Station, based upon gross sales commissions, that he's going to be having some retail space open. I'll try him one more time. Dwayne, if you want to.
So there's an opportunity for partnership, and if you want to connect with him, anybody associated with the Beyond 6 Feet Apart program can help you find him. I think he also put his number in the Q&A. Ewan Davis, you had a comment about equity and equality and business property. Would you like to chime in? And I'm going to check the Q&A for additional questions. Meanwhile, Chris, I threw you a question a while ago and didn't let you answer it. You want to chime in about other opportunities?
I think, and even Carlene asked the question, are there any more grants out there? I think, you know, the flavor of the week for me has been, there are a lot of, in the sort of, if anyone sort of in the process of the PPP and the EIDL program has been on SBA webinars where they say they can't comment on pending legislation, or particularly, you know, in Massachusetts at the state level, there's similarly pending legislation. I would just comment that my expectation is that there is more coming because it is needed, and because we've sort of been through the process. As an example, the Mass Inc. survey of small businesses in Massachusetts, we've been gathering sort of data and information to suggest that, you know, there needs to be more. And as far as sort of programmatic efforts are concerned, I think it's a similar case that, you know, this crisis has forced a lot of corporate actors to mobilize their excess and to suggest, okay, we're going to start allocating capital to this. And we've seen a lot of sort of press releases on it, but we're in the stage of sort of operationalizing things. And I think, you know, in the same way that as the PPP process was unfolding, and, you know, I found myself sort of glued to the SBA guidance and reading through their standard operating procedures, I think we're in a similar position of, you know, waiting for guidance, but there is light at the end of the tunnel. There will be more programs providing low-cost capital. There will be more programs providing grant funding. Right now, I don't have any that I can identify other than to say, if there are sort of local government programs that you've seen that have run out of money, I would make sure that you're sort of in front of those people and sort of maintaining contact in the same way that, you know, Karen and Lisk are suggesting, stay on the lookout for when the next round is coming, because it is coming. I think the best sort of strategy right now, the best tactic, is to sort of keep yourself as close to these sources as possible, because there will be more capital through the pipeline. But right now, I think it's more the survival and cash management tactics of going through negotiations with landlords, going through negotiations with your suppliers and clients, and suggesting, you know, if you can pay up front for something to get sort of cash to you, but you're taking it at a discount, those are the sorts of things that you can start doing to sort of keep cash on your account. But, you know, I completely recognize that as sort of the overall capacity utilization, or the overall business level relative to sort of the close of 2019 continues to be very low, especially in Massachusetts compared with the nation. The best course is to, you know, keep employing the tactics and to wait for more, because it is coming. It is coming.
I see Shayla McCall asked in the chat, what grants are available now? Are there any for massage therapists? I haven't seen that, but I will tell you, I know of a massage therapy business that went to their municipality, and their municipality was making grants available for local small businesses. And I happen to know this particular business owner, and she was like, oh, there's probably someone who needs it more than me. And I was like, no, this is for you. You have had, like, you're a massage therapist. You've been shut down for months. People are afraid. This is, you know, and she has also worked on her safe protocols and her marketing and her business proposition. But she got one of those grants. So you should absolutely be connected to the community development or economic development office in your municipality, whether it's Boston or Worcester or a suburban community. Let's see, what else do we have in the chat? I want to hear from some of our Beyond 6 Feet Apart businesses that are starting to develop your plan. What are you looking to finance? Half of you said you need $25,000 or more. What's it for? Put your name in the chat and we will let you speak. Ewan Davis, you're having trouble with your microphone. I'm sorry. I'm not sure how
Karen, it was just because I wasn't giving her or him the opportunity to talk. So I've
great.
allowed them to talk. So
Ewan, you can make your point or ask your question now if you want to unmute yourself. And I want to thank Gisela Soriano, who just posted a grant opportunity for Black-owned businesses from Facebook in the chat.
How you guys doing?
Hey, Ewan. Great. How are you?
It's pronounced Ian.
Ian, I'm sorry. You know what? Tina sent me a private chat telling me that. I apologize. Ian.
Thank you, Tina, and I want to thank Tina a lot just for a lot of that she's done through a lot of this process for me. So thank you guys as a whole.
She's pretty awesome, right?
Yeah, she is. But my point I was going to make was the equity in business property is really never discussed in a business like a barbershop or a massage therapist or some of these smaller personally run businesses that can make do on having some type of property like this on a longevity term. We just don't hear about it. We don't see it. We don't get a chance to even get something like that when made available because we don't really hear about it. I want to know more about the opportunity to do so. It may not be through this, but I just wanted to make sure I touched on that because it's something that we speak about in the barbershop a lot.
I think that's a great comment question, Ian. And it is the right question for LISC. There is absolutely nothing easy about making low-cost ownership opportunities available in this space. However, this is a good time for it. There are likely to be there'll be properties that are destabilized and available. It's hard to bring together the right resources because the repayment stream is unlikely immediately to be what's necessary to repay traditional debt. So it means finding subsidy. So I think it's perfectly appropriate for you to put that right on our agenda and ask the CDFIs at this table to think about it, especially those of us who do have a sort of corridor development or neighborhood-based focus. We work with community development corporations who are particularly focused on particular neighborhoods. So I think you're in Dorchester, if I'm not mistaken.
I'm in Mattapan.
You're in Mattapan.
Yeah, my barbershop is in Mattapan, but the company that you mentioned, Barber Time, is a media network for barbershops and salons to distribute information and stay connected. And that type of information is something that if LISC is the company for that, you guys should really consider channeling information through barbershops and salons in any neighborhood, anywhere, because they're the closest to the community to make sure that they get the information.
I love that. Thank you, Tina. Let's not forget to do that. I want to invite another one of our business owners to join the conversation, Liliane Sousa. If I don't know if I'm pronouncing your name properly, but please, if you can join the conversation, we'd love to hear your story.
Okay, sorry, because I'm calling from the phone. I tried to write over there. We are like we are a newspaper, magazine, and website, social media. We have like Facebook, and it's like 60,000 organic people on Facebook, and starting to develop the Instagram and YouTube, and also website groups. WhatsApp groups. We just recently partnered during the COVID with all the complications. There was an opportunity to partner in a radio station and a local radio station. And we just did that because in the past, we've done like partnerships with radios. We had radio programs, and we also understand that podcast is something that's like growing. And with the radio, we also helping creating more content. And the more content we have, we believe the more clients we can more readership we attract. But right now, we definitely really need like a marketing strategy to combine all this media that we have. We became like a media group pretty much, with all the like areas that we working on. We also promote events, community events, and we are very engaged. We have a nonprofit organization that we also don't work too much with, but with the census now, we started to be more active. And when I said 25,000 for the funds, because I think we still, even after the program, we still would need to get some help with creating this marketing plan. And then we're also going to need to hire a salesperson, and need some equipment, because you do videos, lives, and for the radio, I think we are set, but like to combine with the podcast and everything. I'm just thinking that that's what we're gonna need, but a lot of training also.
Mm-hmm. I think we're finding, is it Liliane? Am I pronouncing it correctly?
Yes, Liliani, yes.
Liliani, thank you for sharing your plan and your experience. I think we're finding that almost all of the businesses we're working with need to invest in their marketing strategy and in their digital capacity. And so one of the things we're trying to do is to experiment with different ways to help businesses build their digital capacity so that you can do more yourself and grow your staff and your team. But I think it's important for all of the consulting teams that are on the phone to think about this with your client. It's not really a safe assumption that the work is just going to happen and that the staff is there. You need to take into account whether there's consulting services or additional staffing needed and work that into the plan to have a realistic one. So we're getting short on time here.
I just want to mention one more thing, is that the impact that we create, because we deal with a lot of clients. We've been around 30 years, so we have a lot of clients, and all of them have been impacted. And one of the reasons I want to focus on the marketing is because I want to create a capability to help the customers, our customers, with a lower cost, for them to have their own social medias, help them build their own, be part of our services, because a lot of them don't have this because they don't have it for an accessible cost, and they're not prepared to do it. And we can't offer right now at this moment. Okay.
Liliani, I am so inspired when a business owner who's come to like solve their own problems ends up with that kind of message, which says we can help the other businesses that we're partnered with. Like, and I think you can. You're in a really unique position to push out information and learning and create, you know, access to resources for all the businesses you're working with. So I would love to continue that conversation with you, and I hope your team is listening and that they're going to come up with some great opportunities with you that relate to that. I want to, if our panelists have a success story they want to share, I want to invite you to do so on the way out, or any last advice that you want to share. And I do want to throw out, Fatiha, you can say it yourself out loud. You're recommending that we follow one of our participants on LinkedIn. So why don't I go to you first, if you don't mind?
Yeah, I want to just go, like I all the time, my famous 2 cents. I think the power of social media, there's so many opportunities. Just to what Caroline said, there should be grants and there will be grants. You just have to keep your eyes open. And I think social media make everything really, really very easy. So just following different institutions on social media. Giselle, which is a former Axion, and she works for the city of Boston right now. And she's amazing. I all the time reshare the grant opportunities. She puts things every single day. So I highly recommend actually following her. The other thing is I want you guys to help us help you. I want you to pick up the phone, talk to the city, to the mayor, the office of the mayor. There should be, you got some help. Some of you got, some didn't. But I personally think it's not enough. So just like speaking and being a nag a little bit about your needs so we can actually get more funds too. So I want you to actually help us help you. That's all.
And Karen, I'm just going to piggyback on that. I encourage you all to tap into your Main Street. Tap into your Main Street. They have programs through the city of Boston that are free, even outside of programs for finance, but just programs in general for your marketing, for signage, everything you can think of for small business. The Main Streets programs offer that. Tap into your CDCs. You have to go, you have to get out there. You have to get out there and make phone calls. And the resources are there, and they're there for you. So if you're questioning whether or not you're in a Main Street, you actually don't have to be in a Main Street to make a call to the city of Boston and just the Office of Business Assistance, the Main Street office. Just contact them and let them know what your needs are. They have consultants waiting to help you for free.
Sounds like what everybody always wants, right?
Listen, and tap into these Kiva loans. Like you'll be crazy not to. Like this is you're never going to find a loan like this. And as long as you have social media and friends and network, the money is yours.
How did they do that, Carlene? Tina.
Oh, I was like, Carlene's going to answer
that was Freudian or something. Sorry.
So
how would they tap into the Kiva loans?
You can reach out to me at tpatigny@lisc.org. Let's have a conversation. Let's get you connected to a trustee, and let's get the ball rolling. Go to our website. You can find me there. If you're, if I spoke too fast, tpatigny@lisc.org.
Chris, take us out.
I guess I was just going to say, I'm happy to yield my time to Carlene. I know she had sort of posted a couple times. I think she was trying to sort of add a final comment. And she is one of our success stories as well. So I don't know, Adam, if you want to sort of give her a few seconds to make final statements, but I guess I would just say, Carlene, Monumental Market, one example is sort of the Massachusetts Food Trust Program and trying to sort of put capital into these food retail businesses that, right now is highly active for them. Carlene, are you there?
Yes, I'm here. Can you hear me?
Want to take us out, Carlene?
Oh.
Chris offered you up for that.
Sure. Oh, no, not like so nervous. Can you repeat the question?
What's your advice to other businesses? Oh, go ahead, Tina.
No, I just want to say I am so excited and I am so glad that Carlene is in this program because I accosted her in a pizza shop.
Yes. You did.
Well, thank you all. Carlene, I don't want to put you on the spot any more than that, but I do want a piece of that cake that is in your photo. You've really made me hungry. And so we're going to let everyone go off and find their dinner and their dessert. We really appreciate everyone's time. Please feel free to reach out to any of us. If the panelists don't mind, we will share your email addresses with the participants in the webinar so that people can reach back out to you. And we hope to hear from you. Thank you so much.
Sure.
Thank you.
Thanks all.
You caught me off guard, Chris. Sorry.
No.
Ready. Have a good night.
Bye.
You're one of his success stories.
My final advice is just to stay in touch with your TA providers. That's what we're here for. It's, we're all out here trying to send updates on LinkedIn and to keep our sites up to date, but even just a quick phone call, 5-minute conversation can be helpful to both of us, because we need to know how you're doing. And, you know, if we sort of know something's coming down the pipeline, we can help you get in a position to sort of have access.
Chris, Fatiha, thank you so much. This was such a great conversation. We should do it every month.
Yeah, I have to say this one was definitely one of the my favorite talks out of all these seminars so far. This one was definitely my favorite.
Well, thank you, Carlene. Appreciate it. All right, everybody, go have dinner.
Thank you. Have a good night, everybody. Bye.
Thanks all.
Sure.